Is with us, Chief Investment Officer at ITI Asset Management Company. Rajesh, good to have you with us here. Thanks very much. You guys have been doing well. Assets have been growing. I believe some 7,500 crores now. So congratulations to you and your team. But we got to talk about what to do post Tuesday. So just your sort of mental construct. And don't say elections don't matter, because I think that makes the conversation moot. Maybe that doesn't matter over a period of time. Of course, things fall into place and there is the sort of regular tailwind. But immediately, depending on what comes, how are you kind of preparing for it, if you are at all? Or are you creating some cash to be ready if an opportunity so arises? Just run us through your thinking.
Sure. First of all, thank you, Prashant, for congratulating us on that milestone. It's always good to get a certain milestone and get over that. As we build a business. So thank you for that. I actually believe that elections do matter, right? How a government plans the economy, how they decide to spend money, etc. It has mattered in the past in India. I don't know why people say that elections don't matter. They do matter. And I think that's a significant event even today. Regardless, I would say that today the assumption is that this current dispensation, the current BJP government, will come back to power. If it doesn't, that's a black swan event, which will mean a 10 to 15% correction in the markets. Now, if the base case of the market that the BJP does come to power, it doesn't matter what the composition of the seats is. My sense is the markets will kind of breathe a sigh of relief, minus a few percentage points here and there. The questions we keep getting is, are the valuations discounting everything? And after the event, once the BJP comes to power, will it mean a short-term peak for the market? Now, there is some apprehension that is what is really going to happen, that market may have a bump up once the news is out of the way. And that may mean a short-term peak, because every sort of good news is kind of priced in. Well, that may be true for the shorter term, and after that, the budget will be something that the markets will look forward to, and markets are a little apprehensive about capital gain changes that may come for equity, etc. Regardless, but after that, my sense is that this is a bull market, right? And this is the best of its kind as it gets, because the breadth of the market is so wide. The quality of the market is so good. This is the best kind of bull market that you can get. And it's a multi-year bull market. So my sense is that as you move forward, once the elections are out of the way, whatever correction comes between 5 and 7%, or if it's a shorter term peak and there's some time correction, be ready for a very exciting 5-year period, which is continuation of the bull market.
Okay, so Rajesh, afternoon. So if we do get any sort of a correction for whatever reason in the market in the next 6 months, which stocks and sectors would you recommend buying?
So every bull market has a leadership. The leadership of this bull market has been the investment theme, the infrastructure and capital goods themes. Look, even just the power sector alone is going to require $500 billion of investment over the next 10 years, right? There's a lot of the reasons have been kind of already familiar. The rise of artificial intelligence is going to mean a lot of data centers. It's going to mean electricity, electric vehicles, villages getting power. And you're at a peak power deficit in India today. So this cycle is going to last 5 or 10 years, and probably power output would grow at 8% per annum. So my sense is that's one part of the capital goods story. Here, I definitely prefer product producers rather than EPC manufacturers. But my sense is that the entire theme of investment cycle will play, as you move forward over the next 3, 5, 7 years.
Okay, all right. Hi, Rajesh. Good afternoon and good to see you in. Congratulations, as Prashant as well said, topping 7,500 crores in record time. So good on y'all. Your investors as well will be quite happy. In the past, we have discussed this factor that the central government investment to the GDP is at multi-year high. And that's why some of those cap good, railways, various other sectors have done quite well. But I wanted your view on the PSU banking space. Y'all were quite bullish on that space. These stocks have clearly outperformed. But now some part of the street believes a lot of those tailwinds will disappear going ahead. Do you believe that? Would you take a fresh bet on PSU Banks, or would you hold on to what you have?
So Nigel, thanks for that, your appreciation of our milestone. See, as we have been bullish on PSU Banks, and of course, I think the two important variables for banking profitability are net interest margins and credit cost. Both are at their best. Some would call probably at their peak, but there is no indication that either the NIM margins are deteriorating in any significant manner or slippages are accelerating. So both the important variables are actually in place. And if we have a government which is to the liking of the market, which the market believes is going to be growth oriented, then I think loan growth will also continue. Valuations, however, for public sector banks are reflecting the peak ROEs that these people are making on higher leverage. So as far as valuations are concerned, I think there's a lot of catch up that has been done by the public sector banks. But like I pointed out, either NIM margins or slippages are at their best, but there is no indication that they are slipping as you move forward. So my sense is that they will continue to perform in the market. Having said that, I am gradually moving a little more towards the private sector banks, where I feel that there is greater consistency and compounding of their loan growth as you move forward. So from a preference perspective, there's a marginal shift towards the private sector banks, but my sense is public sector banks will continue to do well.
Rajesh, hi, good afternoon. Great to have you on the show. So another takeaway from the Q4 earnings season was most FMCG companies saying that rural is starting to show signs of life, pick up. Many companies like Dabur said their rural growth was actually better than their urban growth, right? So are you a believer in this rural recovery? And if yes, then what way would you play it in?
So I wouldn't say that that's where we are. At least I am, as a fund manager, focusing excessively. There are pockets of two-wheelers where I'm still playing the rural recovery. But FMCG is, if it moves from a 3% volume growth to a 6% or 7% volume growth, that's exciting. But, given the kind of growth rates that we are seeing in other businesses, I don't think that is going to attract my attention in any significant way. And the valuations are not that cheap. That tells me that I can have a very large valuation re-rating as well. So there is a select pocket of rural recovery play that I'm playing, but I'm still focusing on what is the leadership of the market, which is the banking, the investment, infrastructure, capital goods space, and telecom. That's really where my major overweights are, or my attention is.
Totally get that. So let me just rewind back to one of your favorite areas, which is capital goods and industrials. What about valuations there? Because again, we're talking about stocks, even MNC stocks up 100, 122% in some cases. So where do you find valuations still comfortable, or where do you find the earnings trajectory still comfortable, even to support maybe lofty valuations?
Yeah, so I'm not expecting now price earnings to kind of expand from wherever they are, but I think the earnings trajectory will still be adequate. I have a preference for product companies because I think, as the cycle gets elongated, what happens is the margins of some of the product producers does expand. So my sense is you're going to get a little more surprised by the margin expansion that you can have with some of the product companies. And I think this is still a multi-year growth story. So my senses stay there.
A question, what do you mean by product companies when we're talking industrials or capital goods? I mean, specifically, what would that imply?
All the capital goods companies. Some people who supply power equipment, transmission equipment, so on and so forth. But my sense is that, in the PSU basket, Nigel asked me that question, do you prefer PSU banks? I'd rather go for the PSU power financiers. I think that's really a better way to play the infrastructure story as well.
REC PFC, right, Rajesh?
I can't name stocks, but...
Yeah, no, got it. No problem. I think we'll leave it there, Rajesh. Thank you very much for your time. Good conversation as always. And thanks very much for joining us here on CNBC-TV18. Rajesh Bhatia with ITI AMC with the perspective on the market. We're down 36 points now on